Let's get to our panel for some instant reaction. I don't know how to interpret it. Lindsay, I'll start with you. I don't know if you've weighed in yet, but is it possible that with the PCE easing a little bit and where it doesn't look like we're in a recession, that's a pretty good number. Can we extrapolate to say some people think a soft landing is possible? Maybe we can raise rates. Maybe we can bring inflation down a little, but the economy can survive. Is that why stocks are up?
Well, I think the third quarter number was certainly better than expected, as Rick laid out. But I would caution to say that this is an indication of sustainable upward momentum and more reflection of static support, particularly to the consumer, as we saw lower gas prices, as we saw additional state and local stimulus come down the pipeline, consumers increasingly willing to draw down what remaining savings they have and turn to credit cards. So I don't think that we're seeing upward momentum in any of the components in the third quarter report. And in fact, also, as pointed out, durable goods, when we strip out those other components and look at the core of business investment, is starting out the fourth quarter particularly weak. So I do think this was a welcomed reprieve relative to 6 months of negative growth at the start of the year, but this is hardly indicative of strength for the underlying economy. That being said, it will be a feather in the cap for the Fed, who is focused entirely on reinstating price stability, and with prices still near a 4-decade high, there is no indication that they will deviate from the current pathway to higher rates.
Nancy, their knee-jerk reaction recently, whenever we get a strong economic number, it's bad because it means that the Fed has to do more work and go further. We've gone from negative GDP to positive GDP. Why isn't the market selling off if the Fed has to do more? Is it the PCE that came in a little better?
I think so. Yeah, definitely. I think it was a little bit of a feather in the Fed's cap to see the inflation print actually lower and GDP higher. I think the one thing I would say is that consensus across Wall Street is definitely very bearish. A lot of market pundits really believe that we are going to be entering a recession. And I think you have to look at what's priced into Fed hike expectations. And we have another 75 basis point hike already priced in for the next one. And then we have another almost 50 basis points priced in as well. And so I think the market is really priced in those Fed hikes. And so I think you could see maybe a relief rally if the Fed doesn't have to hike another 75 basis points twice in a row.
Yeah. Livornia, is it possible? A soft landing? Is it possible?
I mean, anything is possible, Joe. The point is, if you look at the last 6 recessions, 4 times the economy grew 3.3% right before we went into the downturn. So there's no momentum in the economy. And importantly, if you look at the yield curve and we normalize it for the level of rates, we've never been more inverted. And the yield curve not only predicts recessions, causes recessions because of liquidity and credit that doesn't get created when that curve is so inverted. So we could avoid a recession, but very unlikely in my view.
What do you think, Austin?
I think a recession, I mean, the most common cause of recessions is the Fed raises interest rates faster than the economy can handle. Where that would happen in the sectors, you already see that a little in this GDP. Business investment, housing, consumer durables, the stuff that's interest rate sensitive, that's the stuff that's going to suffer. And we haven't said anything about the dollar. With the dollar as strong as it's been, you're likely to see even more hit on manufacturing in the U.S. because we're going to be facing import competition that's cheaper. So by no means are we out of the woods. It's a nice observation that the PCE deflator was less, maybe we've peaked in that, and that's the main thing that the Fed looks at. It's a little bit of a better measure of inflation than is the CPI, and this is decently strong growth, but our overall point is still pretty bumpy. So I think people should buckle their seatbelts on this one.